we would like to compare between commercial banks and investment banks. So commercial banks are called depository banks, which means they accept deposits from the public. Investment banks are considered non-depository banks, which means they never take deposits from the public. Consequently, which one is supposed to get a higher supervision from the government? Which one should be regulated, highly regulated? So regarding regulation, because commercial banks, it's not their money, therefore they should have higher regulation. While for investment banks, they don't get the public money. Consequently, they get lower regulation. Therefore, which one is supposed to get a higher risk? Depository banks, they have higher regulation. It's not their own money. Consequently, they cannot take a higher level of risk. Therefore, the level of risk they take is very low. While for investment bank, it's mainly a high risk because they have less regulation and it's their own money. Therefore, expected return. Investment banks, they have a higher risk. Consequently, they have higher expected return. While for depository banks or commercial banks, they have lower risk. Consequently, they have lower expected return. So, sources of fund. From where do they get the money? Usually, commercial banks, they get the money from depositors. This is the main source of fund. While for investment bank, they provide advisory services to corporates and to governments. These advisory services could be initial public offering, mergers and acquisition, or risk management.